Okay, we'll just start paging the members of the committee. It's 3:30, but we can't start until we have a quorum. Okay, I see a quorum now, so let's call the meeting to order, and we'll just look to see if there are any disclosures of pecuniary interest. I don't see any disclosures of pecuniary interest? No. Thanks everyone for dropping by this special meeting. I know we had a SPPC if needed for 4 o'clock, so this is why we ended up picking this time in advance of council tomorrow, and thanks for accommodating that in your schedules. You'll notice that we're logging into the eScribe system for this meeting, so we are the guinea pigs. Hopefully it all goes well. I will just turn to the consent item, the staff report on the 2018 debenture issuance update. I think we'll hear from staff first, and then I'll open it up for questions and discussion. Go ahead.
Through the chair. So just a quick introduction. So essentially we were able to, we're looking to proceed to have the final approval for a debenture issue of $55 million. And I think we're very pleased with the rates that we were able to achieve at an all-in rate of 2.976. So less than 3% we're very, very pleased with. So we have our assistance through CIBC this year that has done the debenture issue, and we're happy to answer any questions if there's any specifics that you'd like us to take you through. But essentially, the rates I think we've timed it very well from our perspective in going out early to the market.
Let's open it up for questions.
Thank you, and I agree that this is a pretty good rate and well timed. I think sub 3% is going well. My question less on this debenture issue, more on the trending of interest rates over the last few issues. Obviously, we got a surprisingly shocking rate a few years ago of 1.87, and it's been trending up since then. Do you anticipate that it'll continue to go that direction, and are those accounted for in our financial modeling going forward?
So through the chair, yes, a number of years ago, we had a really, really low rate, which we're not foreseeing we'll be able to achieve anytime in the future. Certainly with our modeling, we are seeing interest rates go up. So I think we're very pleased at the rate we were able to achieve. I believe based on and I'm not sure if CIBC would like to comment on their perspective on this any further, but essentially we think they'll go a little bit higher yet in the future. So I think getting out there early, we certainly couldn't achieve what we were there. I think when you look back at probably a couple years prior to that, we were getting a little bit similar rate to where we've been probably about 5 years ago, but which kind of ebbs and flows over time. So certainly we're pleased with it. I think you'll see interest rates start to increase in the future. So definitely with respect to timing, that I'm not sure you're going to achieve the rates that brought us to below 2% in the near future.
More a comment than a question on this is I certainly agree with that assessment, and I think Again, we've done very well by going out early, especially in a climate of interest rates rising. I wouldn't mind hearing any commentary on any sort of challenges in fulfilling the debentures. It seems to me like the comments we've had in the past is based on our AAA credit rating and our fiscal plan and the discipline that we've had. It's been very easy to fulfill the offerings. I wouldn't mind hearing any commentary on whether that's been an issue this time or whether that trend is continuing.
So I will pass the floor over to Karen from CIBC to be able to give us a little bit of the specifics to answer your question. But certainly I would say with respect to our AAA credit rating, that is a huge advantage at this point in time when we do go out to do a debt issuance. So we're very pleased that that is on our side and in trying to secure some favorable rates. So I will pass that over to Karen to provide the rest of your answer.
Thank you. Thanks for having me. You should all have a copy of the presentation in front of you. Perfect. So I think some of your questions will be answered through this presentation if I can just quickly go through it. So starting off with page 2.
Can I just interrupt for a second? Is it possible to get any of these slides up on the screen? Because it's going to be difficult for members of the public who are trying to follow along. We have it in front of us, but.
No, unfortunately, I only brought the hard copies.
I do think we actually have the ability to project a hard copy of whatever's in front of the camera. So.
Do you want to use this copy so we can project?
Yeah, if you. Anyway.
Yes, of course.
You see that? It'll be on your second screen too. Okay.
Thanks very much, Steve.
Perfect. Sorry about that. Thank you. So the issue did represent the first Ontario municipal serial debenture in 2018, and we feel that's important because we feel the city was really able to benefit from first mover advantage, meaning we felt there would be a lot of investors who would want to buy AAA municipal debt because there really hadn't been any new issue supply yet this year. And the offering was also followed by a successful 20-year transaction by the City of Montreal that came earlier in the day. And as Annalise had mentioned, the city did achieve a rate of 2.976%, which in our mind was very, very attractive, being that it was able to come inside 3%. And we did market the issue globally to investors in Canada and the US, and we saw a good demand there from 8 institutional investors. Just flipping to page 3. So the city does typically use a serial format, which for a municipality of their size is pretty similar to a lot of your peers. This is a standard offering structure that's been offered by the city for over 25 years. And the Region Appeal priced a 10-year serial debenture last year at very similar levels. And today we actually also priced a 15-year serial debenture for the Region of Halton at very similar levels again to the City of London deal. And in response to your question on the AAA advantage, we feel the rating is very important because it does appeal to the broadest range of investors. There are some investors who are only able to buy AAA debt and as a result would be able to look at this piece of paper. And it also ensures that you do achieve the tightest possible spread to Canada and to Ontario, and we can able to achieve maximum price tension for you. So we do feel the AAA credit rating is very important, and we would recommend that you do whatever you can to maintain it going forward. Flipping to page 4, just an overview of the distribution. So as I said, we did broadly distribute it to 8 institutional accounts, which I think is pretty broad and diverse for a transaction of this size. We did sell bonds to investors in both Canada and from across Canada, and to the US, and from across Canada, with, as you can see by the chart on the right side, very good support from insurance companies. when we were marketing this transaction, we did receive feedback from investors who elected not to participate in the offering. And it was simply because they felt the rates were too low and the spreads were too tight. So in my mind, I will take that any day. And then moving forward to page 5, just highlighting some key market themes and trends. We do feel that global growth is continuing to improve. Inflation expectations are rising. So we do feel central banks are biased toward higher rates overall from a global perspective. More recently, there has been a lot of uncertainty and volatility surrounding NAFTA and any potential trade wars with the US. So that is creating a bit of uncertainty. But overall, we are expecting rates to trend higher through the course of 2018. Turning over to credit spreads, we do feel the credit spreads are continuing to tighten. Provincial spreads are at multi-year lows, and municipal spreads are at pre-crisis levels, and reflecting the demand that we're seeing for high-quality product. Overall, though, I would say investor sentiment is still feeling a little bit defensive. They are concerned about a higher rate environment. And, they are concerned about uncertainty that we're seeing globally through, Trump tweets, et cetera. And, there's ongoing volatility in the equity market that we're seeing lately. To page 6, a closer look at interest rates. So as you can see on the chart on the right, interest rates have trended higher from the middle of 2017 through to now. And as I said earlier, it's generally biased toward higher rates overall, just because the market is anticipating the Bank of Canada, the Fed, to increase rates just on strong global growth and inflation. And in fact, CIBC is forecasting the Bank of Canada to have one more hike in 2018. We're forecasting that to happen in July. And then we're also anticipating 3 hikes out of the Fed, which is the first one is expected this upcoming meeting on March 21st. I would add that CIBC is probably one of the more conservative banks out there with its forecasts. Some other Canadian banks are calling for 2 more hikes out of the Bank of Canada and 4 hikes out of the Fed. We've chosen to take a little bit more of a conservative view just because we want to see the ramifications from NAFTA and also, how the market reacts to increases in rates from the Fed. But overall, as I said, the overall trend is toward higher rates. And flipping to page 7. As I said earlier, we are still seeing strong performance in credit spreads in the provincial markets, and we've seen a trend toward lower credit spreads, which is great for the City of London overall. More recently, we have seen a little bit more volatility just due to the equity market volatility, but I would say overall spreads remain very resilient despite all of this uncertainty and market volatility that we've been seeing. And that takes me to the end of the presentation. And you can see on Appendix C, you will see more of our chart on rate forecasts from a numerical standpoint.
Go ahead, Councilor Morgan.
Thank you, and I appreciate the presentation. It answered pretty much every other question I had, so that's great. I will say I kind of like it. Actually, I'm very happy to hear that the complaint from those who didn't participate was that the yields were too low, yet we fulfilled the offering completely. That's probably that is a very excellent position to be in. And I'm curious if, and this is a question for our treasurer, if given that we were the first offering and that seems to be a very good position in a rising interest rate environment, I'm wondering if we can report back, say, in the fall on, looking backwards, how we performed versus our municipal peers in going early to confirm that was a good strategy or not. I mean, it seems like it is. It has been in previous years, but having that confirmation reported out later in, say, 2018 would be something that I would value as a councillor. So other than that, thank you very much and great presentation.
Councillor Zapen.
Thank you, Mr. Chair, and through you also to our staff and to those here from CIBC. These are, I think, given our current economic climate, quite good rates that we're seeing. One thing I know which has been mentioned is the AAA credit rating. I don't know if anyone in front of us here can give us some example or comparison, but how another municipality with a lower credit rating, what they might be seeing or have seen in comparison to London in terms of a borrowing rate. Thanks.
I would say relative to, say, one of your AA peers, it would be a differential of at least 5 basis points. Investors are definitely asking for a bit more of a spread premium in exchange for a lower credit rating.
Through the chair, thank you very much for that answer, and it's just helpful, I think, to see how clear it is the difference that it can make by having that good of a credit rating, because obviously that 5 basis points can be quite significant, and over time, the amount of money that we might have to spend on debt, is going to be quite lower as a result of our good credit rating. So I'm glad to see that. Thanks.
Councillor Reynolds.
Thank you, Mr. Chair, and through you to our staff or our guests. Looking at it, I see that we're making semi-annual interest payments and annual principal payments, and just wondering why that's the case as opposed to some other payment strategy.
This is a pretty standard structure that we see within all bond structures, I would say. So I think to change it to, say, an annual interest payment or something that bond investors are not familiar with, or as familiar with, I should say, I think they would also demand a bit of a spread compensation for that extra level of unfamiliarity and comfort level.
Thank you.
Any other questions or comments, colleagues? No? Okay, I'm just going to draw our attention to page 9 of the package. This is the comparison. And I think the most important column is the credit spread versus Ontario, kind of showing what we would go out at 17, which is very low. I don't know that the City of London has ever got a spread that tight. I think that's certainly lower than what we got last year. And it's significantly lower than what you see in the region of Waterloo or even the City of Ottawa with the green bond. That's a very good sign that we're doing very well in the credit market. So I'm glad to see that that's the result coming out of this. Let's get it, I need a mover and a seconder, and we're using eScribe, so it's been moved by Deputy Mayor Hubert, seconded by Councillor Zafman. I would like to open the voting, thank you. Okay, you see the voting up in front of you there, colleagues?
Closing the vote, the motion carries 5-0.
Colleagues, you'll see on your screen there's a, underneath the mover and the seconder, there is a result. If you click on that, it will show you the results.
Right.
And that's up on for the public to see right now.
There you go.
Okay, I'm looking, there's no other items of business. I'm just looking, this is a special meeting, so we can't really add additional business. Perhaps we have a motion to adjourn. I moved by
Let's use the system.
Councillor Morgan, yeah? Seconded by Councillor Zafman. You can click on the voting in progress button if you need that to pop up.
I haven't.
I want to just, before I vote on this and adjournment, congratulate our staff on a successful test of the e-scribe. That's great. We've tested out a new voting system successfully.
Motion carries 5-0.
Okay, we're adjourned. Thanks very much, colleagues.